as we get started on this webinar is everyone has a control panel, and on that control panel you have a spot where you can type in questions. And when those questions get asked or typed in, I get notified, and we'll take 2 breaks tonight to do that. So one break will be about 20 minutes in before we go on to the special topic, and the other one will be at the end after Larry presents his special topic. And one of the things that we always commit to is staying on as long as it takes, even if it's after 9 p.m., to get all of your questions answered. So go ahead and write those in. We've got a lot of people on the line tonight, so that's why we keep everyone muted, obviously. It would be chaos without that. But go ahead and write in your questions, and we'll be answering those. We'll take a bunch of them about 20 minutes in, and then we'll take the rest at the end. And I've gotten a bunch of questions already, so I'm just actually going to click on that real quick just to make sure it's nothing technical. Nope. Okay, perfect. Good. All right, so we're going to go ahead and get started here. And again, if you've just joined us, and I know there's some people still joining fast and furiously, welcome. Real quickly, my name is Mark Maneri, and I'm your host tonight. I'm joined by my colleague, Larry Walters, and we are going to be sharing with you over the next hour an overview of the FairTax, its main points and merits, as well as a special topic that my colleague Larry will be presenting, which is, again, why we don't want the 999 plan that became that got a lot of airtime and became very prominent while Herman Cain was in the presidential race, and why we need the FairTax, and what those major points of differences are. So we'll be hitting that, and then we'll certainly be taking and fielding all of your questions and making sure we answer them, or if we can't for whatever reason answer them, we'll be sure to get back to you. All right, so I think that's a good overview. Let's go ahead and get started. I'm excited to see so many people on the line tonight, and from a registration standpoint, we had all 50 states represented, which is so awesome to see. And it's just exciting that we have this medium now that we can present this message in the comfort of your own home. So I'll say it up front now in case I forget at the end. But our challenge to you is when you come next month to bring one additional person, a spouse, a colleague, a friend, a neighbor, anyone, and get them educated on the FairTax. And if we keep doing that, we'll keep this train moving in the right direction. So with that, let's go ahead and get started here. And one of the things that I like to talk about with the FairTax is that it's very, very simple. And what you're looking at here on the screen is how big our federal tax law and our tax code is. And we're now actually over, I believe, 75,000 pages when you look at all the amendments and the addendums and the footnotes, and when you add it all in. And it's crazy. That in and of itself obviously suggests that we need a new system. It's broken. It doesn't serve us well. It doesn't serve the government well. For every dollar they collect, it costs them a quarter. That's totally inefficient. We've got the IRS, which has thousands of employees, that keeps getting more staff and more money thrown at it every year, and now costs over $10 billion with a B dollars to run every year. And it's extremely inefficient. But more importantly, the laws and the guidelines within our current tax code penalize economic growth. And so we need a system that can fund our federal government, but support and reward and incentivize economic growth. And that's exactly what the FairTax does. So very, very simply, the FairTax is legislation that exists in Congress right now, known as H.R. 25 in the House and S.13 in the Senate. And the FairTax, by the way, is 131 pages double-spaced. And you can go to fairtax.org and download it. and just download it to computer and read it. And it's a really easy read. So very, very simple. And if we look in terms of what exactly the fair tax is, well, it's a new way to fund our federal government. It is the most researched tax reform legislation ever conducted in the history of the world. $22 million of independent third-party research from some of the brightest minds and economists from around the world went into researching the quintessential, if you will, the perfect system for a capitalistic society for collecting tax and funding the government. And that's how the fair tax was derived. And what it is a system that would eliminate all personal and corporate income taxes and all the other taxes you see on the screen there, and it would get rid of all those taxes and all the loopholes that come with it. And we would simply fund our federal government through a national retail sales tax. And what that means is that when you go and buy something, whether that's a brand new product or a service, 23 cents out of every dollar of that product or service that you purchase would be set aside by the retailer, by the business, into a separate account, and every month they would remit that 23% of every transaction off to their state sales tax bureau. And so what that means is that every single American now is contributing effectively to the federal government coffers. And it's important to know that because that's fair. And right now, only 50% of Americans are actually contributing in real dollars to our tax system. And I'm going to show you here the other component to FAIR that ensures lower income class Americans and every American for that matter, lower, middle, or upper income class Americans are treated fairly through a concept we'll call the prebate. But know that what happens is we broaden the base, and that's what allows us to put a retail tax in place without having to overtax the 50% of Americans and stifle growth through our current tax system. So notice 2 check marks at the bottom of the page there. There's no tax on business-to-business production costs and no tax on used goods. So on the first one, I like to use the example of a construction company that builds new homes and sells those homes to the consumer. When they purchase the inputs to build that home, all the wiring and the plumbing and the bricks and the landscaping sod and everything else that goes into a house, when they purchase those from other companies, that's considered a business-to-business transaction and no fair tax is levied on that transaction. When they build a house and they sell it to a consumer for the very first time, the fair tax then is levied because that would be considered a brand new good. Well, when that consumer then lives in that house and then sells that after living in it for several years to another consumer, that home is now considered a used good, and the consumer who buys it from the first buyer does not pay the fair tax. So that's how the fair tax works. It's very, very simple, and I'm going to talk to you about the simplicity in terms of the numbers here in just a second. And the other thing I want to share with everyone here is that the fair tax is inclusive. And so what that means is, if we go back to this new build example where they're buying a new home for, say, $100,000, they do not end up paying $123,000. The 23% fair tax is inclusive. It's included in the price they pay for that home or for any retail good or service that anyone buys. All right, so the fair tax is inclusive, and that's really important to know because as we talk about the next slide, we're going to talk about our current pricing system, and it's really important to understand that as we talk about this 23%. And why that's important is because if you look at the second bullet point on the screen, we talk about this embedded tax. The embedded tax is equal to approximately 22% of cost currently in all of the retail goods and services that are sold today. And what that embedded tax are the corporate income taxes and the cost to comply to the current income tax code that businesses incur, right? So right now, as consumers, we actually pay an income tax, obviously, but really we're paying a sales tax, and that sales tax shows up to the tune of 22% in every good that we purchase. We just don't realize it. It's embedded in there, and it's embedded in there because businesses they pass off their corporate income taxes and their costs to comply to the current tax code into the consumer, and they reflect that in the price of the good that they sell. So basically, if you look at the last bullet point, when the fair tax gets implemented, the 22% embedded tax, which again are corporate income taxes and costs to comply to the current federal income tax system, that comes out. The fair tax of 23% goes in. And what's very, very important for everyone on the line to know is that prices are going to remain relatively the same. They may marginally go up 5 or 6 or 7%, somewhere in that range. But for the most part, prices are going to remain relatively stable. And it's because when you take away corporate income taxes, when you take away the payroll tax, and when you take away the cost to comply to the current income tax code, all of a sudden businesses are recognizing a 22% new profit margin when they sell their goods and services. But when they put the fair tax in of 23%, that becomes almost a wash. Prices are going to increase marginally by a few percentage points, and then over time they'll come back down and even maybe come below pre-fair tax levels because the economy is going to be so robust. The marketplace competition will drive prices down. Now, so 2 points I want to leave you with before we move on. Number one is that you say, okay, prices are still going to go up maybe a few percentage points. I'm still going to be paying a little bit more. That's not good. Well, keep in mind, you get to keep 100% of your paycheck. And for on average, that's going to be realized a 29% increase in take-home pay. The 29% more dollars in your pocket every single month for most Americans. So if you're getting a 29% pay hike and prices are going up, let's just say 5%, you're still coming out up 24%. So that's one point. And the other point is just a reminder that when you buy a good, you do not pay the fair tax on top of that. The fair tax is embedded inside of it. So right now, what that means is if the fair tax were in place today and you went to the store and you bought a $10 t-shirt, you would not pay $10 plus 23%, which would be equal to $12.30 total. You would pay $10 because the 23% would be embedded right inside of it. Okay? So the next point that we want to cover is called the prebate. And the prebate assures, that nobody pays the fair tax up to the poverty level. And this is really, really important. And what this means is that every single month, based on the size of your household, not on your income, but on the size of your household, the Department of Health and Human Services has determined the poverty level limit spending. And you can see it on this slide right here. And based on the poverty level, which is the annual consumption allowance, when you take that annual spending amount and you multiply it by 23%, and then you divide it by 12 months, you will receive a brand new revenue stream into your household. So a married couple, family of 4, if we look at this line, would receive $579.98 every month into their bank account. And the reason it's called the prebate is because it's a rebate that you get on the spending you did up to the poverty level limit for that month, which in this case would be almost $7,000. And the reason it's called a prebate is because it actually comes to you at the beginning of the month before you spend your money for the month. So on the first of the month, via direct deposit, you get $579 in your bank account. And that is reimbursing you in advance for the fair tax you'll pay on poverty level limit spending for that month based on the size of your household. And this is a very important piece of the legislation, excuse me, because Democrats and other demagoguers of the fair tax will promote the fair tax as simply a tax increase of 23%. They'll fail to mention that income taxes go away, and they'll fail to mention the prebate. But when you look at an average increase of 29% in take-home pay, because there's no more income tax withholding, and when you look at the prebate, and you look at prices remaining relatively stable, the fair tax is going to be a windfall for all Americans, and it's going to increase the disposable income for Americans more so than ever before in the history of this country. So it's really important to understand that point. So if we look at the economic benefits of the fair tax, the first point is $11 trillion in offshore wealth are being sheltered in offshore banking centers. And the moment capital gains taxes and income taxes, personal and corporate, go away, that money begins to flow back into our economy. And it's estimated that $1 trillion will come back into the economy in the first year. Secondly, U.S. becomes a corporate headquarter haven. We'll have the lowest effective corporate income tax rate in the world, 0. And companies will locate their headquarters here for that reason. A lot of infrastructure, a lot of building, a lot of construction, lots and lots of new jobs. And if you think about what happens when a business owner can bring back their wealth that's sitting parked in a bank account, guess what they're going to do with it? They're going to do what they do best. They're going to invest in their business and expand it, which means more jobs, which means people earn more money. They've got more disposable income, which means they go out and they spend more, which means the businesses reap the rewards, and those businesses, as they make more money, will keep growing, keep expanding, keep hiring more people, and this awesome domino effect happens when the fair tax gets implemented as a result. So massive, massive benefits for all of us once the fair tax gets passed. Now, how are we going to collect it? Simple. 45 states currently have a state sales tax, and we're going to leverage that infrastructure. So there will be a state sales tax bureau in every single state. They'll be responsible for collecting from all the businesses in their state, which is going to become 80% easier because we'll go from collecting from 120 million households to roughly 20 million businesses. There's only one form to fill out. And every single month, the businesses will simply set aside their 23% of their gross receipts, and they'll send that off to their state sales tax bureau, who will then send it on to the Department of the Treasury every month. So that's pretty simple of how it's going to happen. There may be some kinks we'll need to work out along the way, but I guarantee it's a lot simpler than the system we have right now. So if you think about everything we just talked about, we're going to simplify the tax system. We're going to give the average American a 29% pay raise. We're going to put more money in people's pocket than they've ever had before. We're going to give businesses incentives to grow, and the federal government is going to actually, over time, generate more money than ever before because of the economy growth. So if you think about that, why would anyone not want that? Well, the only reason they wouldn't is if they're acting out of self-interest, and those are the people you see on the screen there. See, 50% of lobbyists are tax lobbyists who are put on 6- and 7-figure retainers by wealthy corporations to lobby for income tax changes that favor the corporations they represent. Well, the moment the corporate income tax goes away, those lobbyists are no longer needed. They're out of a job. So they tell politicians don't do it, and of course the politicians don't want to do it because they like 75,000 pages in an income tax code, because when they have a project they want to get funding for, they don't have to raise the fair tax from 23% to 24% and have every American know what happens. They just have to pull some hidden lever, change some wording in the tax code that we never know about, and they get to pay for it. So they get to hide behind their 75,000 pages, and they lose a lot of control when the level of transparency dramatically increases with the fair tax. So you got to be conscious of that. When anyone says they don't want the fair tax, they're really talking out of self-interest. So with that, I want to stop for a second, and we've had a bunch of questions written in, and I am going to field some questions here. I want to make sure my colleague Larry is along with me. He was having a little bit of audio trouble, but sounds like he's on the line. Larry, can you hear me?
Oh, yeah, I can hear you, Mark, and I hope you can hear me.
Yep, I can hear you just fine. So we're going to go ahead and field some questions here, and then I'm going to turn that presentation over to Larry, and Larry is going to take you through the 999 plan and talk about why that's not in our best interest. So we'll get through a handful of questions right now, and then we will go for it in the special topic. Okay, so a question comes in from Rick Byrne, and Rick, thank you for writing in your question. And his question is: would you respond to the criticisms by Bruce Bartlett in the benefit and the burden? I'm not familiar with exactly those criticisms, and I'll ask Larry. Are you familiar with those? Hey, Larry, you may have put yourself on mute. Can you hear us?
Yes, I can, and I did mute myself. I forgot to put myself on.
We can hear you now.
Okay. I was familiar with those criticisms. They were so long ago, I had forgotten about them. But Bartlett has been, for some reason, an adversary to the fair tax, and is just been ridiculous in his comments. But that's the most I can say about it, though, Mark.
Okay. If you want to go ahead and write in some of those specific criticisms, by all means, we'll address those specifically. So thanks for writing that in, and if you want to take them a little bit more specific, go ahead and do that. What is the status of the fair tax in the Senate? And that question comes from Richard. There's a total of, here we go, Larry, 75 or 76 co-sponsors total in Congress right now, Larry?
I think it's 76. We have 9. Well, we have 8 co-sponsors plus the sponsor in the Senate, so that's 9. And 68 co-sponsors plus a sponsor in the House.
Gotcha. So in the Senate, Richard, we've got 9, and in the House, we've got a total of
68, I think it is.
68, that's right. People are asking me about 75,000 pages in the tax code. Is that true? And what the heck is in there? That's a great question. But yes, 75,000 pages is the right number. In terms of what's in there, well, your guess is as good as mine. But what is interesting is there was a study done where one person's tax return was given to 30 CPAs or 30 different people that were CPAs, tax attorneys, and IRS auditors, and not one of them came back the same. And that just goes to show you that the tax is so convoluted. We've got to get something simpler. Okay, question comes in from Rebecca. She writes in, is there a provision for people to opt out of the prebate if they choose because they have the means to do so? That's an interesting question. I believe the answer is no. Larry, correct me if I'm wrong. But the prebate was put in place to, Rebecca, just so you know, not to differentiate based on income, based on whether or not people have means, but simply to reimburse all qualifying Americans who have a valid Social Security number for the fair tax they pay on the poverty level limit. And that tenet of the fair tax is important to being fair across the board and not playing favorites, even though your question suggests if people choose. So I don't believe they can opt out, but I'm going to ask Larry and see if I'm accurate on that.
Not quite, Mark. You're not quite accurate. As Mark said, the premise of the prebate was such that no essentials of life be taxed, and the prebate helps do that. Now, people can't opt out per se, but they are not required to file for the prebate, which means they won't get it, because people will have to file a report or a form once a year identifying everybody in their family and submit that to the federal government, or probably to the state. And then they would qualify for the prebate if they have legal residence in this country and a valid Social Security number. Mark, I am getting a terrible echo, which is confusing me. Are you hearing it?
I do not hear it on my end, Larry.
Good. Okay, if everybody else isn't hearing it, I'll endure.
Okay,
Back to you.
Thank you. Okay. Thank you for that question. That was actually a little nugget of knowledge that I wasn't aware of before, so I always love learning something else. I'm getting a bunch of people to write in about the echo. If you could write in, are you getting the echo right now with me, or just when Larry talks? If you could just write that in, we'll try to minimize that for everyone. Okay, only with Larry. Okay, so Larry, try just muting and then unmuting yourself, and that might make a difference. All right.
I've been doing that each time.
All right. Well, hopefully we can minimize that. Okay.
I can hang up and redial in.
Well, let's see if we can get it switched out here. I'm gonna actually put you on mute, and then I will unmute you. See if that makes a difference. Okay. Let's take a couple more questions. I want to give Larry some time to go through the rest of his presentation. So this question comes in from Daniel, and Daniel asks, how are people that are unemployed treated by the prebate versus unemployment checks? So I think what Daniel's asking is, what's the difference between the prebate versus unemployment checks? Those are mutually exclusive. The prebate is for everyone, regardless of income, regardless of employment. As long as you have a valid Social Security number, as Larry said, you can apply for the prebate based on the size of your household, and the purpose is to reimburse you for the fair tax you spend on the basic necessities of life every single month. And spending money on basic necessities is the equivalent of saying poverty level limit spending, right? Unemployment obviously is a social program that the government, the state and federal governments have put in place to help people get by when they lose their job. So the two are mutually exclusive, and one has not to do with the other. So if somebody is or isn't employed, it has no impact on whether or not they can apply for the prebate. Larry, anything else on that?
No, that's absolutely true.
Okay. Another question, if I visit my doctor, will there be a tax on that transaction? The answer is yes, it's a service. So all services are taxed and all new goods are taxed. But again, remember that tax on that transaction will be embedded inside the doctor's visit. So if that doctor's visit normally run you $100, you're still going to pay right around $100, maybe a few dollars higher. So understand that embedded the factor of the fair tax goes in there. But the answer to the question is yes, it will be levied on that transaction. We'll take one last question and then we'll go to the special topic. And Rick, I did get your question about writing in the criticism from Bruce Bartlett, so we'll address that at the end. The last question we'll take before the special topic is, will the fair tax stifle new home construction? I'm glad you asked that, Henry. The answer is absolutely not. And the reason why is this, is because, remember, the price of a new home will marginally increase, just like all goods and services will marginally increase a few percentage points. But remember, the average American's income is going to go up by 29%, and Americans are going to have more disposable income than they've ever had before in the history of this country, which means they can save much quicker for bigger purchases like a new home. And as a result of by the way, of businesses expanding in the booming economy, interest rates are going to stay low, and the access to capital will be easier. So if we've got more money and an easier access to capital and prices of new homes staying relatively the same, guess what's going to happen? The housing industry is going to boom, just like all retail industries are going to boom, because people got more money to spend on it. All right, so hopefully that addressed that, Henry. What I want to do now is just take a 30-second break here. I'm going to pass the presentation over to Larry. And then Larry is going to start showing his screen. So give us 1 second here. Go ahead and grab a drink. And we'll be back with you in 30 seconds as I pass this presentation over to Larry.
Okay, I got it. Do you hear me, Mark?
I can hear you, and we can see your screen.
Okay, so I need to open that up. There we go.
Okay.
Now is it covering your screen?
Yep. Hit that enlarge. There you go. It's all yours.
Okay. Well, I'm going to pick up on something that's dear to all of our hearts, and that is the income tax systems in general, and try to justify some of the reasons why we want to get rid of them. We're very familiar with the income tax as it exists, and have plenty of reasons to get rid of that. I would like to address a little bit why we do not want to settle for any form of income taxation. There is a lot of pressure on Congress right now to look into real tax reform going into 2013. And the feeling is that it is going to happen. The challenge for us is to be sure that when it does, the fair tax gets a fair share. So the special topic, why we don't want 999 or any other income tax. And the question is, have you had enough of an income tax? You know, we've had 99 years of income tax system so far. And we know it's a bad system. And I liken it to the gasoline prices. It went from simple to a little complex, then back a little bit towards simple to ease our discomfort. not ours personally, but those that came before us. And then it was followed by a larger swing toward a more complex system, and it continues the cycle, going up in ever increasing complexity in nature. And why would we want to continue with this kind of a system? Who benefits from it? Oh, now we know who benefits from it, don't we? Okay, well, let's start with the 999 and its highly touted survey. This is all information that's on the Herman Cain website, so you can validate any of it if you want. But the survey had 900 respondents, and it was reported that 50% had a good opinion. And I'm wondering, a good opinion of what? What were their choices? Would you believe? None. That's right. The question was posed in such a way that the respondents would only think of comparing 999 to the income tax system we have now. And here's the question. Here's how it was posed. During his presidential campaign, Herman Cain proposed a flat 9% business income tax, a flat 9% personal income tax, and a flat 9% national sales tax. This proposal is called the 999 plan. Do you have a favorable or unfavorable opinion of the 999 plan? Well, duh. I don't know. Do you? What's the choice, 999 or the income tax system we all know so well? Let's look at a few of the details of 999. There is a good element to it, as it does replace the entire income tax code. It eliminates the existing deductions except those for charity. But who gives a rip about getting 9 cents back on a dollar and having to file a federal income tax return to get it? Remember, under the FairTax, nobody files federal tax returns again. Well, what else does 999 plan offer? Let's see what we can do to please Congress. You know, nothing would make Congress happier than to have an income tax and a sales tax. And they wouldn't even have to fight for it under the 999 proposal. 9% personal income tax, 9% personal sales tax, 9% business income tax. And there's that money tree feeding Congress. Well, what else will 99 give to our beloved Congress? To keep them happy, let's give Congress tax on taxation. How about the key components of 999 giving Congress? The 9% business tax plus the 9% income tax to be embedded and hidden in the cost of goods we then pay a 9% sales tax on the embedded tax when we buy stuff. Don't you just love that idea? Well, 999 has some more unique ideas too. There is a $15,000 business credit per employee. There's a business credit for being in an empowerment zone, which is another new exception. There is individual tax credits for working in a business that is in an empowerment zone, and tax credits for exporting goods. Because if you have those embedded costs, then we do not help the trade price balance as much as the FairTax does by eliminating all income taxes. So it's getting a little bit complex, isn't it? Would you call that an example of building complexity from the bottom up, of social engineering? 999 is also touted as a bridge to the FairTax. And I just cannot imagine, why do we need a bridge? Herman says he's uniting the FairTax, the flat tax, and the FairTax supporters, but the evidence doesn't support that statement. Evidence indicates he is dividing the FairTax supporters. And I want to know, why does Mr. Cain insist on dividing the nation, dividing the support for the FairTax? Let's get off 999 for a bit and talk about the flat tax legislation, which is in the House. H.R. 1040. It is an add-on amendment to the Tax Reform Act of 1986. In other words, it does not remove any of the existing income tax code or regulation. And many people will take the reversible option to be taxed under the flat tax because it does simplify our life when it comes to tax filing. Initially, we're taxed at 19%, plus our payroll taxes. We're still going to have Social Security and Medicare taxes withheld from our paycheck, and then a 19% flat tax for the first 2 years after your election of the flat tax, and then it goes to 17% after that, unless Congress makes some changes along the way. But those who game the system now, they won't take that option. They'll continue to game the system, and we will continue to pay for their tax breaks. And I've got the question of, if the flat tax is such a good deal, why is the option irreversible? Let's look at what we had to start with our income tax system when the 16th Amendment was passed in 1913, and what we had in 2011. The 1914 tax return for year 1913, IRS Form 1040, was a whole 3 pages, and they were well spaced. They weren't types jammed together like they are today. Instructions were only 1 page, but in 2011, the simplest tax filing we can have is Form 1040-EZ. Only 2 pages, very tightly packed, but the instructions were 43. Why did we have to go from 1 page of instructions to 43 pages? That is what we can look forward to again if we continue with an income tax system. So, do you still think an income tax is a good idea? Flat tax, 9/9 tax, or any number of the flat taxes? Choose your poison. But consider this. Look down the road a few years. And what if? What if one of the modified income tax plans is passed next year? Maybe the 999. What if, as is typical, the political power pendulum starts to swing back to the liberal, moderate, socialist side at the next midterm elections? Are you ready to put up with 6 or 8, maybe 12 or more years before it is realized there was a mistake and we need the fair tax? I want you to hound your candidates and representatives to death to pass the fair tax. And if hounding doesn't work, try something a bit more aggressive. There you go. Get Fido on them there. But remember, they work for you, and they can be fired. But that's up to you and the voters in your district to make that happen. Don't waste your vote, because it is the only bullets we have to fight this war. So vote for the fair tax candidates. Do not support those who do not support the fair tax. Go for liberty. Go for the fair tax. And I'll turn the control back over to Mark so he can handle the questions coming in, and we'll see what we can do to answer them for you. Mark?
Thank you, Larry. I want to make one comment. On what Larry said, because a couple of questions came in. You know, how do we get the fair tax passed? What do we need to do? Well, obviously we need votes. We need to get our elected officials to vote for it. And that all comes back to, as Larry said, using the power that we do have, which is our vote when we vote in those elected officials. So from where I sit, and everyone's going to be different, but from where I sit, I make the fair tax, the economy and the fair tax, the most important issue in a federal election. So if the candidates in my district don't support the fair tax, but they do support all the other issues, it doesn't matter, because for me, it's about the fair tax. And when you fix the economy and you create a system like the fair tax that's truly going to benefit us, it's going to fix a lot of other things. So if I'm on my soapbox, I tell people, you vote for the candidates that support the fair tax, and that's the best way that you can show your power and wield your power. And then what we need to do is spread this message. So, thank you, Larry. That was excellent. All right, so let's go back to our questions here. We got a bunch of them. The first question comes from Bradley. He asks, at what percentage of GDP is the fair tax revenue neutral? I don't know the answer to that. I don't know the answer to the percentage of GDP, But here's what I do know. The fair tax was devised in a way, and it was structured in a way such that the 23% number is the correct number to ensure that the government generates the same amount of revenue or more than it does right now. It would be projected to collect the same amount, and then as the economy grows, obviously over the next year or two and beyond, it will collect even more money. So I don't know the percentage of GDP that makes the fair tax revenue neutral. All I know is that at the rate Americans are spending right now, the 23% is the right number based on the $22 million of fair tax research that went into it, that would raise the same amount of revenue for the federal government as it does right now. Larry, do you have any other comment on that?
No, you had the right answer. I think what you might have missed is that when they just tried to determine what the tax rate would be, they looked at the GDP versus the amount of revenue being brought in by the income tax system, and then 23% of the GDP. Actually, it is 23% of the GDP because the GDP is what we sell, isn't it? It's what we purchase.
That's right.
Consumption amount. So, no, that's probably not quite true because some of that should be export. So I don't know what the percentage is, but I do know that the GDP was calculated as the baseline to determine how much income is being drawn by the income tax, and then how much percentage is required for the fair tax rate. Mark?
Yep. William asked a question, what would force a business to remove from their product the embedded taxes they now pass along? Well, it's an interesting question. I don't know that any business would do that right now. Any good business person is going to look at their costs, and then they're going to price their product or service in such a way where they will generate a profit after they sell however many units of their product or service that they project they can sell. And corporate income taxes and costs to comply to the income tax code go on as line item costs for every business. So if they're not doing that, I would say that they're probably not an intelligent business person. I mean, I do that with my own business. Every business does that. So I don't know that there's anything that would force a business to do that right now. But of course, once the fair tax gets passed, that happens automatically. So hopefully that addressed your question, William. Larry, would there be anything you would add to that?
Yeah, I think William asked that question from the premise of being under the fair tax. What would cause them to lower their costs through the supply chain as opposed to keeping the extra profit? And the answer to that question is simply competition, William. The only exception to that would be if there is a business that has a product or a service that is absolutely unique and there's no competition, then it's whatever the market will bear. And that's what the free enterprise system is about. But otherwise, for the most of the things that we deal with on a day-to-day basis, competition will bring the price down. Because if you and I have the same business and fair tax is put into place, well, the first thing I would do is look at how much of your client base could I tackle and make them mine by having a lower price. If you want to protect your client base, I think you're going to lower your prices too to be competitive with me. Mark?
Yep. Good thought. Thank you, Larry. Rick asked a question responding to my quoting an average increase of overall prices across the board of around 5 or 6%. And again, that number is a bit nebulous. And the reason why is we don't know what it's going to go up to because we haven't done this before. If you're asking for why do we say that, it's a good question. It's the answer that I got from the representatives at Americans for Fair Taxation, AFFT, who is the body behind the fair tax legislation that commissioned the study. But I will ask Larry if you can give any simple calculations that suggest why prices may rise in the neighborhood of 4, 5, 6, 7% or so initially when the fair tax gets passed.
No, I don't have a simple calculation for that. In actuality, the research that was done divided the nation's businesses into 45 different industries. And amongst those industries, they took the costs, the embedded costs that were in the tax system or in the supply system because of the income tax, and determined what they were as best they could. The range of embedded costs or embedded taxes in the price of everything we buy today is from 20 to 25%, depending on the industry. The big box stores on the low end, services, medical care, insurance, things of that nature, construction are on the high end, 25%, and actually a little over 25% in some cases. So because of that variety of range, it's hard to give a number to just what the prices might go up to. And all we can do right now is guess. Costs might come down 5 to 10%. Add the tax, and prices at the retail may go up 5 to 10%.
Thanks, Larry. So, question from Daniel says, if I purchase a brand new set of golf clubs from my local pro or pro shop, I will pay the fair tax. Yes, that's correct, because it's a new good, and the fair tax is levied on new goods at the retail level. And then he asks, will the local pro pay the fair tax when he buys those clubs wholesale from the manufacturer? The answer is no, because that is a business-to-business transaction. So that wholesale transaction, business-to-business, no fair tax levied. It's only leveled once at the retail level. And then Daniel, if you were to turn around and sell those new golf clubs that you used on Craigslist to somebody else, no fair tax levied. So that would sort of finish that off, how that plays out. A question from Bradley comes in. What mechanisms are in the legislation to allow for reducing the size of government and the 23% rate? Really good question. The first point I'm going to make is that the fair tax is a revenue model shift first and foremost. That's what it is. That's what it is designed to do, is fund the federal government in a way that doesn't stifle and disincentivize growth and expansion. It was not built for the purpose of reducing the deficit or curbing federal spending. It's not written into the legislation to do that. I think if we get a Congress in place that sees the merits of the fair tax, theoretically they will have the same principles in their thinking that would cause a reduction in the size of government and in our spending. But the fair tax legislation itself doesn't specifically legislate against spending or reducing the size of government. With that in mind, Larry, is there anything else, nuances within the legislation that you are aware of that speaks to that point?
No, Mark, you hit that right on the head.
Okay. All right. Larry, I'm going to send this one right to you. You do a real good and simple job of explaining it. So I've said a bunch of times, and this question comes in from Philip, and I'm glad you're asking it, Philip, so it can be clear for everyone. He asks, why do you use the 29% take-home pay increase for the average American? So Larry, can you take people through that example?
Sure. And actually, we can't really say that it's a 29% increase for the average. Well, for the average, we can say that, but it's kind of ambiguous. Here's the fact. The average American today is in the 15% tax bracket. That means he is having withheld from his paycheck each payday his withholding plus his FICA or Social Security plus his Medicare taxes. Under the fair tax, he will now be taking those taxes home as part of his pay. So if you were to take your last pay stub or your next pay stub, add up what those three elements amount to: your withholding, federal withholding tax, your Social Security tax, and your Medicare tax. Add those up, come up with a number. Divide that by what your net pay is, and then move the decimal point 2 places to the right, and you'll come up with a percentage. If you're in the 15% tax bracket that I mentioned, you will find that the percentage is 29.28. There's other variables in there that are not accounted for in that. For example, if you're having voluntarily deductions for health insurance or for retirement funding, that means your net take-home pay is going to be even less. That means your percentage of take-home increase is going to be even more. And if you're in the 35% bracket, it's going to be more. If you're in the 10% bracket, it's going to be less. Mark?
Thank you, Larry. All right. This is actually a good follow-up question that I'm going to ask Larry you to go back to it. And the question is from Steve: what keeps businesses from just keeping the extra profit when all the embedded taxes are removed once the fair tax gets implemented? So in other words, why would they pass that on in the form of either lower prices or allow their employees to take home 100% of their paycheck?
Okay, they'll have to allow their employees to take home 100% of the paycheck in order for the employer to keep those employees. There are many contracts in place, union and otherwise, that will have the employee taking home the gross amount that they contracted to work for. Now that there's no longer any federal deductions, that gross income will become their net. As far as the other embedded taxes that are in the system, I answered this earlier in part of the answer to a question, and that is competition. If you and I have the same business, let's say we're a bakery, and we're just a couple of blocks apart, so we're dealing with essentially the same pie, and I want to start trying to grab some of your bakery patrons. If I lower my prices and you don't, I'll start luring them to me. And then, of course, your income is going to start going down. If you want to compete with me on that bakery business, you're most likely going to lower your prices to maintain competition. And it's that same story across the nation. And that's what our country has been built on, is the free enterprise, competition. And that's why the consumer is king. Mark?
Yep. All right. I'm noticing it's 9 o'clock here, so thanks for staying with us. We've got everyone here still. I got a bunch more questions, and there's some good ones in here, so hang with us for another 10 minutes or so if you can. And I think it'll help clarify some of the questions that are coming up. Okay. Let's see. Okay, so there's a question from Bill. Don't congressional people stand to lose if the fair tax is passed, and what exactly will they lose? When I tried to explain this earlier, Bill, so I'll just quickly recap it. What they stand to lose, the answer is yes. And what they're losing is power that was really given to them or taken by them in the form of a convoluted tax code that allows them to make financial decisions for their districts or the country without any transparency in that decision-making process. So, for example, wealthy corporation wants a tax break. They employ a lobbyist. Lobbyist engages the congressman or woman, the congressman or woman, in exchange for some perhaps campaign contributions for the next election, they go to bat for the corporation, and they make some changes in the income tax code system. Well, you and I as citizens, we have absolutely, we don't know anything about that. And so all this legislation is happening behind the scenes without us knowing about it. That's affecting a small minority of people. And the moment the fair tax gets passed, if they want to change the tax rate from 23% to 24 or higher, guess what? The moment we go and buy something and we see on our receipt that the tax rate is no longer 23%, it's 24%, and the tax code got changed, we're going to raise hell. And we're going to get on the phone across the country with our elected officials and say, you bring it back down or you're out of a job, because we're not going to vote you back in. So that operating in the shadows and that power, that financial power, is a lot of what the politicians lose as a result of going to a transparent system like the fair tax. And unfortunately, they're scared of it. But if they're scared of it, that means they're operating out of self-interest, and we don't need them or want them if that's the case. So hopefully I addressed that for you, Bill. Okay, Rick wrote back in about the Bartlett criticisms. He suggests criticism number one is that the incentive and opportunities for tax evasion by retailers are simply too great, that businesses will cheat on paying the fair tax. That I'm actually not, and I did read this as well as Larry did many years ago. And then now that you bring it back, I remember how ridiculous that criticism is, because think about this. We go from trying to collect from 120 million households to just less than 20 million businesses. So we're 80% more efficient. And then right now, if somebody wants to cheat on their taxes, they can just decide not to pay them, and it's, depending on the size of your business, small businesses fall under the radar when it comes to the IRS's ability to police that. It's very easy to do that. But the point I want to make is that it only takes that one person to make a decision to do that. In the fair tax, it takes two people to cheat. It takes the business deciding that they don't want to pay the fair tax, and then it takes the consumer to be in collusion with them, right? So usually when people ask about sidestepping the fair tax, it's actually on the consumer end, and for that same reason that I just suggested, it's very difficult to sidestep paying the fair tax, because you have to get the consumer and you have to get the business involved. I guess on the business end, I'm gonna ask Larry if you can think of a scenario where it'd be easy for a business to sidestep the fair tax relative to how easy it is today under our current tax system.
Sure. It would be easy on a random basis for a small business to give a friend a product without collecting the tax on it, or at least without reporting the tax, and that would go unnoticed. The real issue is that 85% of all revenue comes from the big chain stores, big box stores, your Sears, your Costco's, and so on and so forth. That's 85%. They're not going to take a chance losing their license to do business by not reporting the taxes. Secondly, every business in each state is going to have to be registered with the state and have a tax exemption certificate in order for them to be able to purchase stuff without paying the tax on it as a business. And since it's going to be state controlled, they have much better opportunity, a much clearer vision of what's going on business for business within their state, because except for the 5 that don't have a sales tax yet, all the states pretty much know what kind of revenue the various business industries bring in. And if they see a large fluctuation in that, that's a flag that they can go after and find right away. So there's several elements in that. Some of them say, well, if 85% is coming from the big chain stores, we know we have to trust them. The rest of it is almost insignificant. And from that point, you just say, well, okay, somebody will cheat from time to time, but it's not going to amount to anything that has to be of any concern. And then when you compare it to the income tax system, you say, oh my gosh, this is nothing compared to the cheating done with the income tax. We know that that is over $380 billion a year. Mark?
Yep. Thanks, Larry. Good. Larry, a question from Daniel. Does the federal government pay the fair tax?
Yes, it does. All governments will reap the benefit of not having to pay FICA taxes, payroll taxes, which includes FICA, and the withholding taxes of their employees. So they've got that benefit, and in exchange for that, we're going to be charging them the fair tax on the stuff that they buy, that they consume for themselves. So in other words, the government is consuming it for its own use. If they are purchasing something to provide a service to the community, to the nation, that will not be taxed. And that's some kind of an area that's kind of cloudy to understand, but that's the essence of it. Mark?
Perfect. All right. Question from Rick. I have hounded my representative and she did not co-sponsor HR 25. What should I do next? Great question. Well, there's a few things. Number one, don't stop. Number two, at the next election, vote for someone else if they are in favor of HR 25. Number three is really take action. And this is what we ask, Rick, of people who really see the value in the fair tax is it's one thing, and it's important to be on this webinar. And once you have a good understanding of it and you really believe in it and you understand the benefits that it'll bring to us, then it's time to get involved. So that would be your next step after those two things is get involved with your time and get out in your district, find the local fair tax group in your area, and every time there's a public event, set up a table and a tent, hand out literature, get people educated, and really have an impact on getting your Virginia Fox representative out and a support of the fair tax in. It's my best advice for you.
I'd like to add something to that, Mark.
Go ahead.
And this goes for everybody. You're asking the wrong question. Will you support the fair tax? If the fair tax comes to the floor, will you sign it? Why don't you ask them, what is it you like so much about the income tax system that keeps you from supporting the fair tax? And let them defend their position instead of you trying to defend the position of the fair tax. Mark?
Yep. Great thought. Oh, sorry. Rick said Virginia did co-sponsor. I guess I read that wrong or you typed it wrong. Where should I go from here? That's my answer actually remains the same, Rick, is you got to get out and educate more people. And what's interesting is I live in a district in Florida and my congressman is a co-sponsor. And yet he's not necessarily what I'd call an advocate. And so an advocate would be someone in Congress who's going to their peers proactively and saying, you got to get on board with this. And so, keep educating people in your area, and also keep putting pressure on Virginia to not just be a co-sponsor and sign her name to a piece of paper, but be an advocate and lobby other congressmen and women to support the fair tax. That's your next step. Larry, question about rental property. If I decided to rent out the home I live in now and have already paid the embedded tax when I bought it, would I have to submit the fair tax on the rental income?
I don't know. That's an interesting question. I know that rent is taxable as a service. Whether or not you would have to, I guess I would have to say yes, you're going to have to collect and submit the fair tax on that service. The thing that sits beside me here as a thought, though, is as somebody with a single residence that you are renting, are you going to register with the state as a business? Very possibly you're not. And I think that could fly under the radar of the State Department of Revenue. I'm not recommending you do that. I'm just suggesting that that's what might happen. Mark?
Thanks, Larry. A question from Paul. Paul says he's a handyman. He charges by the hour, by the second, actually. Will I be required to collect 23% tax? Yes, you will. And again, as Larry said, as long as you're a registered business, then yes, you'll be required to set that aside. And again, keep in mind that no compliance costs and no income taxes, and you'll get the prebate. And so, hopefully you see that, Paul, still is a win for you. All right. Will we be able, this question's from Rebecca, will we be able to stop dealing with healthcare flex spending accounts with the fair tax? I don't know the answer to that. I don't think, from my current knowledge, that a healthcare flex spending account necessarily is directly related or connected to the taxation system. I think there may be tax benefits where you can make some deductions with the healthcare flex spending account against your current income tax. But when the income tax goes away, so do those deductions. And so it strikes me that it's not going to impact a flex spending account in any way. You're simply going to have more disposable income with which to spend on healthcare if that's what you're choosing. Larry, would you suggest anything different?
No, not at all. The idea of the flex spending account is to give you the ability to save money and not pay the income tax on it. So that's a deduction on your paycheck that you're not being taxed on. When the income tax goes away, you're not having any deductions any longer. You're getting your whole paycheck. I see the flex spending account is going away. Mark?
Yeah. There's been a bunch of people that have asked some Herman Cain 999 related questions. And I got a write-in from, a Jim Duffy, who's on the line with us. And Jim has actually said that he and his leadership have been in direct conversation with the Herman Cain team, and would be happy to give a report on those discussions. So I'm going to just actually take Jim off mute and give Jim the floor for just 60 seconds, and could shed some light on that. Jim, can you hear me okay?
I can hear you fine.
Great. You're coming through great. So you want to give us just in the interest of time, just a super quick overview on what those discussions and conversations have looked like with the Cain camp?
Sure. A couple of months ago, we had a telephone conference call with them, which in it we asked a bunch of questions that they couldn't answer directly. And so then subsequently, a month later, they called us to have a meeting. They flew into Atlanta, 4 of the top people, including Rich Lowry, and a couple of the other top folks in the group. And from that discussion, we came up with 3 things that they would have to do in order to even get any kind of interest on our side. And those 3 things were, 1, they would have to up the rhetoric regarding 999 to always include the fair tax on the same level. If Herman's going to the fair tax, then he's got to talk about it every time he talks about 999. The second thing, any legislation would have to include the repeal of the 16th Amendment as a part of it for 999. And the third thing was that any legislation for 999 would have to automatically flow to the fair tax In other words, there would be no separation. It'd be a part of the same legislation. That if you can get those three things in, then maybe you've got some discussion with us we could possibly support. But until then, we're against it, just like the other flat tax programs.
Thank you, Jim. Interesting. Very interesting. Larry, any comment?
They can't comply with that. Simply because if their legislation calls for repeal of the 16th Amendment, it kills their legislation. It kills 999 because they cannot collect any kind of income taxes if there is not a 16th Amendment. Mark?
Yep. All right. Are there any current presidential candidates supporting the fair tax? Actually, I believe, gosh, his name is escaping me now, but the gentleman who is now representing the Libertarians is a fair tax supporter. Larry, do you know who I'm talking about?
Yes, that's Gary Johnson, and
Gary
he
Johnson.
is a strong fair tax advocate. Mark?
That's it. Gary Johnson, who is now the Libertarian Party, and he is a strong fair tax advocate. That's right. All right. A couple, and then more questions were done. Let's see. Actually, just a lot of comments. A lot of comments. Rick actually writes in the third criticism, talking about this Bruce Bartlett article that was written years ago disputing the fair tax, and the criticism that he writes is that all workers would have to cut their real wages by the amount of the fair tax for the wash caused by the fair tax replacing the embedded tax in the goods. So I think what Rick is saying that the criticism is that workers would actually have to cut their wages by 23% in order to have the embedded tax come out and the fair tax go in to make that system work. And that's just not true. When we explained it earlier, let's actually put some numbers to it. Let's say you earn $5,000 gross, and then let's say after taxes, and again, it's not going to be perfect, but just for simplicity's sake, you take home $4,000. Well, when the fair tax gets passed, the business, remember, their embedded costs go away, their corporate income taxes and their cost to comply go away, and that's an approximate 22% increase in new profit margin, right? Now, they're paying out the $5,000 to that worker. It's just that some of it's being withheld, some of it's going to the federal government, and the rest is going to the worker. So when the fair tax of 23% goes in, well, that replaces that new margin, because remember, the embedded tax goes out, the fair tax of 23% goes in, and the worker takes home $5,000. The business was paying out the $5,000 before. It was just that the federal government was sinking their teeth into it in the form of withholding tax. So I don't really see any merit in that, and hopefully I explained that in a pretty simple way. Larry, is there anything that you would add to it?
Yeah, I think the statement that Bartlett is making is correct if you take the premise that when the embedded taxes come out and the fair tax goes in, prices remain exactly the same. In that case, it would be true. But because the taxes that are being paid by the employee, the worker, are going to be going to the worker, it is still part of the cost of doing business for that business. And so there's still going to be that much money in the cost of goods as it goes through the supply line. That's why we can't say definitely that when the fair tax goes in, prices will be the same. We have to wash it. Well, it'll be approximately the same. We know prices, costs will go down through the system, maybe 5 to 10%. and the retail price will go up maybe 5 to 10%. What makes it worthwhile is that you take home so much more money, plus you get the prebate. And it becomes a moot point as to where that dollar is actually going. That was in the system prior to the FairTax. Mark?
Yeah. That's probably a good spot for us to cut it short, and we've gone well over our time limit. I appreciate almost everyone hanging with us there. One last thing I just want to share here is if we look at the screen, and we talked a lot about this, is what you can do is you got to spread the word. A great way to do it is to get at least 1 or 2 people to come to this webinar on the 4th Thursday every month. Talk to and communicate with your congressperson regularly. Give your time. You can go to fftea.webinars, find your local FairTax group, and just reach out, get involved. And then, as we've talked about, use the power of your vote and support the candidates that support the FairTax. So I want to thank everyone for just your time, your interest, your commitment, your citizenry, for being here. And I wish everyone a great evening, and I challenge you to bring one person next month and yourself back to this presentation. And if we keep doing that, we'll build the momentum we need to move this legislation along. So I hope everyone has a great evening. I thank you, and I thank Larry, my colleague, for his wealth of knowledge. And we wish everyone a great Memorial Day weekend, safe travels, and we'll see you all next month.
All right, so long, everybody. Good night.